Good morning, traders, and happy Wednesday out there to everyone. Hope that y'all had a good evening there, and should be an interesting day lining up in front of us after having a better degree of range expansion there on our first full trading day of the month. And in terms of our economic calendar for today, just on the outlook here, relatively light in terms of 8:30 figures, just trade balance for Canada and the US. Shouldn't be a very substantial one. But at 9:45 Eastern, we do have the Bank of Canada rate statement and then JOLTS for the US out at 10 o'clock Eastern in factory orders. So a few items there on the board. And then lastly, we have the beige book there at 2 o'clock p.m. Eastern as well. So that's pretty much what we have lining up there on the board in terms of economic data. Then, of course, we have our daily charts here. The S&Ps with our better degree, again, of range expansion that we had taking place yesterday, trading from high to low. So we were able to escape ourselves from our, prolonged range that we had been building out for the past, 8 to 10 trading days. So our good range expansion down, coupled with a bit of a follow-through or further down in the Globex session, or the overnight. So we got down to 55.0675 for one component, very close to the 5500 round figure. But also, as we can well see here from our extended run to the upside or our single time framing mode, that's where we're starting to dip back into. So we know we did partial testing into the gap area. If we were to come in here and put this on the pit session only visual, the dot D, we can see as to where this gap comes into sight on the actual daily charts themselves. This is again from the 14th to the trading on the 15th, with the very top of it coming in closer towards 54.90, 54.87.75 to be exact. So that's one component, right? Because we dipped into the zone and then did some additional work in the overnight session. So we'll still keep in mind the nature of the gap that remains unfilled out there. Right? We can always do partial filling in first, but for now that's kind of the main component. And then on the other point of interest here would be this previous day's low, right? The 55.16.75. So we could see we're just trading around the previous day's low at the moment, but we did already take out the low from yesterday. So if we come in here on the intraday display of data, it's going to be relatively similar. This blue box zone just indicating, the gap area. So again, closer towards the 54.90 zone would kind of be the better job on filling it. And then up above, kind of viewing this 55.36 as a bit of a hurdle for us, just in terms of coming back up above that point. Might prove to be a little difficult on the first attempt up, but if so, from 36 all the way up to 61 and a quarter, wasn't really traded through a whole lot there during yesterday's activity. So if we were to gain any counter-reactive lift, would be viewing those zones as a initial hurdle or resistance for us. Going down from that time frame, something more like a 60-minute chart, right? As we could see down here, the nature of the oscillator, showcasing a little hint of loss of momentum, but as opposed to fully reverting to the hourly moving average, right? We've been kind of just keeping ourselves contained here at the lower end of the range. So carrying forward those hourlies and the 120-minute time frames there for the S&Ps to kind of serve us in our day session there today. And then, of course, the previous cycle low, which was essentially the bottom of the range that we had been building on, the 61 and a quarter. So we do have a good spread, meaning where we're trading currently well beneath that point. So even if we had counter-reactive lift, we'd still have all this overhead to deal with. So if we keep it beneath 61 and a quarter, would view that as continuation here with our better degree of expansion from yesterday's trading. So hourlies and 120-minute time frames there to service in the case of the S&Ps after better degree of range expansion yesterday. And then next grouping here would be falling into the DAX category. We know that the DAX had also a better degree of high to low out of 3-bar balance mode, so putting an end to the extended run that it had to the upside. We did already get quite a better degree of testing. Right? We came down. We didn't get down there yesterday, but overnight we did a much better job on trading through that 20-period EMA on the daily chart. We have left a tail similar to the ES, but putting an end to the extended run since that was the first close on the other side of it. But as opposed to anticipating a close right back above, we consider the fact that we broke down from balance and indeed have gotten a test below that low into the following session. On the DAX here, we have the hourly charts to kind of serve us. What's nice about the DAX is looking on the far left hand side, we actually have fairly well developed activity from the initial extended run to the upside. So not a whole lot of single prints from the past that we'd be testing into. More so, that's what we left during yesterday's trading. So down here we fell short on trading at the 18,491. That was a previous cycle low that we had. So as we consolidate here in the DAX, we're coming, down off of a reaction high. So what we have not seen form as of yet is any type of higher low structure. So that's one component that has remained to be seen on that of the DAX. In other words, if we were to come back down and retest towards yesterday's tail, if we're able to re-firm up at all, that would give us better, ability to trade back up into some of the lighter developed structure from yesterday. Otherwise, if we're unable to put in any type of higher low structure, then we will have that 18,491 as a reference point for our purposes. But at the moment, good follow through, nice momentum lows here on the hourly oscillators and the counter reactive lift, kind of like the S&Ps. Right, didn't really carry too far, right? We were falling shy on reverting back towards the 20 period EMA on that of the DAX, coming in at 18,689 at the moment. All right, so that's our S&P and the DAX future, respectively. Next in our queue, we have that of our euro currency here. You see a tad more on the contained side overnight or in the Globex session, trading in the form of an inside range bar. As we can recall, looking at the 120-minute data, just helping highlight the channeling activity that we've been working with here. The lower highs and the lower lows that have been persisting here on the 120-minute display. So at the moment, sporting an inside range bar. However, when we come down, two things. One, we have the previous day's low that remains untested. 1.10330, so mighty contained, but on the same token, kind of reminds us as well a bit of that DAX. We're lacking any type of higher low structure. So as we come down, it's degree of channeling, so lower highs again, and as we push down for 1.10835, two separate data points. So viewing that as being a hurdle for us, or initial resistance, if we were even to trade back up to that point. And at the moment would be more so in the camp, since we've been keeping up with these lower highs and lower lows. As we come and do some work here today, lower low component would coincide with the previous day's low. So that's that same 1.10330 that we can add on to the charts there as well, just to give us that extra little piece of visual information. So that's where we're coming in with in terms of the euro currency. We did trade back down towards the 20 period EMA on the daily, and a degree of similarity in terms of how they put an end to their extended run by forming 3-bar balance mode at the top of the swing. So been working fairly well in terms of moving back to kind of our initial breakout point, but we haven't quite gotten to the 1.10330 just yet, so that point remains looming there still. So that's our EC, and then we have our gold market here. Gold, we have to expand out a notch, starting to remind us to some degree of what we had there in the S&Ps, our kind of more prolonged price bar overlap structure or range bound nature. As we can certainly take into account, the past 3 trading days have left very large tails on that of the gold. A couple price rejection spikes. They're making the lower lows, but doing it in a more spiky format. So trying to exit from the previous range that we have built out. We did make another lower low overnight. At the moment, we're still sporting lower highs, so even though we traded through it, still think 2506.4 would be a valid area of interest to have on the sheets. We can see when we've come down to test into the areas, we have left a tail on the intraday chart, so not closing down at those boundaries. And then we have our kind of hurdle point right, in case we want to do any type of holding. Coming back above 2528.4 might require some effort on the first trap, so if we keep ourselves beneath it, we could still rotate and play inside of yesterday's tail. Otherwise, the 28.4 is going to be served as a bit of a hurdle there for us in the case of the gold. But 120-minute charts there to serve us in terms of the structural work that we've been trying to put in here on both the dailies and the 120-minute time frame. So that's our good old gold. And then lastly here we have the crude and the bonds to kind of wrap things up here. Crude as well having one of the larger responses or larger range expansion days yesterday. We know that the unleaded gasoline and the heating oil have also been in agreement, right? The laggards of the bunch, closer towards those lower Keltner channel boundaries on the daily. But we take the crude into account. We did make the new lows yesterday, took out 70.88, and we closed beneath it as well. So very good degree of trendiness in the crude yesterday. And what we have here on the intraday charts are a couple things. One, some of this already played out overnight, a little divergence or loss of momentum in terms of the lower lows in the price and the higher lows in the oscillator. So we pushed up, started to trade into our later developed areas. 71.46 is going to be a hurdle for us. Also, the overnight high. And as we push back down, right, if we come back out here, jumping out that higher time frame again, right, we have 70.10, kind of viewing that as being the inside zone here for that of the crude. So if we were to do any type of regaining of footing, that would be a little zone to monitor. Otherwise, we'd be coming back below yesterday's low in terms of the crude here. You have that same 70.10. So this is just the low from yesterday's trading that we have marked here. Put a little red color on it there. And as we know, up above here, right, we started to trade into later developed structure. Kind of met with initial resistance, so they're respecting it and backing off. So we'll see if we get any type of trading around the previous day's low. Most, if not all, the activity has been taking place beneath the 70.88 mark there in the crude. So definitely having some work cut out for itself. No higher low structure as of yet, just kind of working off like an hourly buy divergence. But again, a lot of this panning out overnight, so we have some retesting that we could still take into account. So 70.10 previous day's low, and then the overnight low, of course, also good to have handy, 69.19. So gives us a bit of a window to work with between these two lower boundaries for that of the crude. And then last but not least here, the bonds. Bonds had their degree of range expansion yesterday. Most of our excitement unfolded there early on in the session off of morning data. So we had our good impulse to the upside. Enough for us to come back inside of our wider range with that of the bonds. However, in the overnight session, we have consolidated or kept them relatively contained. So we're trading as an inside range bar, not too far off from where we closed yesterday. No real follow through, in other words, though. We didn't really do a great job on testing on the other side of the previous day's high. We fell short by one tick. So at the moment, just kind of working off a bit of this 120-minute loss of momentum, if we would, just in terms of the higher high in the price or the higher test that we had without seeing much of that in the oscillator. So we have a bit of a zone here that would be later developed, and this is coming in on the other side of the 123.30, which I'm sure we'll see there on that market profile structure as well. So along the way, if we were to loosen up any further, that's going to be an additional data point to bear in mind there for these 30 years. I'll put that in there with the dashed line to kind of denote its importance there. And then just a quick flash over to them would be that of the 10 years. 10 years, same idea. Loss of momentum or sell divergence on the hourlies and the 120-minute charts. One difference is that the 10 years made a higher high, whereas the 30 years were unable to do so. So that's one small nuance between the 10s and the 30s to take into account. And now with that said, take a couple moments here, get these charts adjusted for us. Again, no real major morning economic data points there for us. So we'll get these situated, adjust a couple things, and we'll see what we have lining up here for these morning movements lining up in front of us here.